Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Daniel Wachs with Perpetual Wealth Management, and we'll be talking about leveraging premium finance for high net worth individuals. Daniel, welcome to the program.
Mike, thanks for having me. I'm excited and look forward to talking through the premium finance strategies with you.
Yeah, I think this is a unique realm in the world of financial services. So I know that's it might be new to some people, and then there also might be some confusion. So I'm looking forward to kind of clarifying that up as well. But before we dive in, get us started with a little bit of your story and background, and how did you get into the financial services industry?
Well, I had a sales training and marketing business when I went to school. And after finishing up that and getting done with the sales training business, I went into the insurance business. I started with Northwestern Mutual back in 1995, so I am on my 30th anniversary of being in insurance. And over time, got financial services, investment licenses, all those different licenses to work with clients. But yeah, I've been doing this for about 30 years. Started with Northwestern Mutual, went a couple years there, and then went off and went independent. So now I'm an independent broker representing many companies. But about 15 years ago, Mike, I started to really specifically work in this premium financing world. I always enjoyed helping people and taking care of their families, using life insurance and philanthropy strategies. But the premium financing was intriguing to me. So I dove into that and studied and learned and talked to banks, talked to people that were doing it. And then eventually met with different insurance carriers, went through a process called a vetting process, which was mainly to see how I structured programs for clients. What was my renewal process for the annual renewals of the bank loans, and went through that and became what's called an intermediate or a vendor. And so I represent 5 or 6 different carriers with the vendor relationship. And what that means is that I work along with other IMOs, agents, clients, providing them these services just to finance insurance policies. So I'm providing the lending aspect. I'm not personally providing the lending, but I'm providing the banking relationships to
facilitating it.
That. Yep, facilitate. That's correct.
I want to dive into, this whole world. What is a premium finance, and, what does that look like? But it was something you said I want to kind of drill in a little bit deeper, because I feel like it's really important. When someone in your world works for a company, they typically can only offer that company's products or services. When you are independent, and like you said, you're set up with several larger organizations, you can sit down with a client, find out what they exactly need, and then pick and choose and structure something that is specific to them, not trying to fit a square peg in a round hole with limited choices, right?
Right. That's exactly correct. Every client's unique. Every client's different. So not every product or not every strategy works for them. So when we're sitting down, a lot of our meeting with the clients is really getting to know them, getting to know their situation. And I feel, Mike, that the best way for a premium finance strategy to work for a client is it to be a part of their overall plan. So some carriers, depending on a client's situation, may be better than others. But like you said, being independent allows us to almost be like a fiduciary, that we're able to provide the products that fit the client's needs.
Yeah. So I want to move into what is premium finance. So if you can define, we hear what is premium finance for high net worth individuals? What is premium finance? And then how does this create opportunities for these high net worth individuals that traditional strategies really aren't going to, touch? And kind of within that thought process, it makes me think, why high net worth individuals? Why can't it be, a minimum wage employee person? So talk a little bit through that. What is it? And then what are the opportunities for the high net worth individual?
Okay, Mike, the premium financing, a lot of people feel it's a pretty complicated type of strategy, but theoretically it really isn't. I mean, really, what a client that is utilizing premium financing is, instead of them paying for premiums out of pocket, traditional strategies, they're actually going to a third-party lender that's going to pay premiums on their behalf. So,
Okay.
like, the one thing to realize though is that premium financing obviously is not for everybody. So I want to just explain who it's for and why. So the who it's for is about 2% or less of the population in the United States qualify for this. So it's not a strategy for everyone. And the reason that is because one of the requirements is that a client's net worth be around $5 million. So that takes out a lot of people. And the reason that is because, most premium financing transactions, the premium minimum for a bank to do this is $100,000. So the premiums are going to be substantial. And the right type of person that can do premium financing is a person that could write a check for that premium that based on their plan, but instead is choosing a lender to do that on their behalf. So the client will make interest payments to a bank instead of premium payments to an insurance company.
Yeah, and I think keyword there, insurance company, because when you hear premiums, okay, well, $100,000 for premiums, what in the world kind of premium would that be for? It's for a specially structured insurance type of a tool. We don't need to get into the weeds of what that is, but I just want to kind of clarify that that's what the end result is.
Yeah, because I think, Mike, just to get into the weeds just a little bit, of most insurance plans, when they're designed, are that a client will pay a premium every year, and that'll provide coverage similar to like a term insurance plan. They pay premiums and they have the insurance. A lot of policies are structured the same way, but what a bank does is actually, instead of a client paying a premium for the rest of their life, what they'll do is take that number basically and fund the policies quickly to make them more efficient. So when we structure a policy, we're buying a minimum death benefit and allowing the cash to go in. But a bank wants to do that in a 5, 7, 10-year period of time. So they're taking the cumulative amount of premiums over a lifetime and then putting it into the policy, usually in a 10-year period of time. So that's why the premiums are a little bit higher, and it's not for everybody.
Yeah. And then there's a myriad of benefits of having that financial tool. But let's move into what are the key benefits of borrowing the money for the premiums versus what if someone just had it sitting liquid? Why not just put it in liquid? What are the benefits of using other people's money?
Well, some people will do that, right? I mean, if they're liquid, they may choose to do that. The main thing is educating the client and saying, this strategy is available, because a lot, like you mentioned earlier, a lot of people have heard the term, but they really don't understand or don't really know exactly how this works. So it's intriguing to me to understand that a high net worth, that we always think high net worth people, they know everything because they're successful. But the point is there are rules we have to follow, and there's also ways to structure the plan. But the main reason I feel that high net worth people will use a lender to fund their premiums is, number one, they understand leveraging. So they know that if the bank's putting the money in, the clients ends up usually paying about 30 to 40% of that premium amount through leveraging. And so they understand that, they're already used to it. A lot of them have real estate, and people understand buying a home and real estate. But the tax savings is another area. What I mean by that is that the interest payment being 20-30% of what the premium is, if I'm funding an insurance policy, it's usually with after tax dollars, and if I'm only having to fund 30% compared to 100%, that in and of itself is a tax saving. And then in the insurance policy itself, that as that grows, it grows tax deferred. But also, if people take distributions in the future and they do it properly, then that money can become tax-free when they're taking distributions, and all death benefits in insurance are tax-free. But the main reason too is that if the policy is structured that and outside of the estate, it's also estate tax savings, because a lot of people who use insurance paying that discounted premium to cover their estate costs upon demise. So that's a big savings as well. So leveraging, tax savings, retained capital. If I can use 30% versus 100%, I have the other 70% working. And most high net worth people have a lot of money tied up into their businesses, investments, real estate, all those things. So if this is part of the plan, then we're using a portion of their plan to fund the insurance policy, but the rest is going to be working for them. So leveraging, tax savings, retained capital, and by using someone else's money and paying 30 cents on the dollar, their internal rate of return of the policy and the way the bank structured with those 10 payments, larger payments, then the internal rate of return is dramatically increased by utilizing the strategy.
It makes me think of the word arbitrage. And I'm sure that there's an element of arbitrage there, right? Where you're, you are incurring a debt because you have to make the payment back to that institution. But then the benefit of having that underlying policy is bringing some benefit. And then there would have to be what goes in, then goes out. But then there's a little bit left over. And some of those left over might be cash value, tax advantages, and things like that. Is that a kind of a broad way to think of things too?
Yeah, I think so. I mean, it's definitely, arbitrage is, how much am I paying, and, am I using the leverage, and can I earn a better rate of return to, satisfy my needs or desires, right? So that arbitrage is important, and I think we'll get into that a little bit later as well. But in itself, the four reasons that that I feel that the client's leveraging or arbitrage could be almost the same word: tax savings, retained capital, and increased internal rate of return, that we're doing it so as we're moving along down the strategy.
Yeah. So let's talk about, really dialing it in. Like we mentioned about you being independent, you can kind of go, okay, let's roll up our sleeves here and create this custom plan. How can premium finance strategies be tailored to fit the unique needs of business owners? Because it's definitely not something just off the shelf. Let's Google this, click it, and set it up.
Right. Well, the business owners that I've worked with, Mike, is first of all, I've met some really, really neat people that have, I'm fascinated on how people earn a living, and I've been to some different businesses, but in business in general, a lot of the benefits for employees or other people involved in the business really are geared for, that type of person, where the owners are really limited in what they can do, and the earnings that they're used to making, contributing to your 401k, all these other things. It's, even if those grow dramatically, it's probably not gonna it's substitute the income that they've been earning during work. Plus, in business owners, if there's partnerships, a lot of times entrepreneurs feel they're invincible, but theoretically they're not. And we have to structure plans or buy-sell agreements allowing, them to protect their interest in their business, and I'll give the capital available then upon demise that allows them for the partnership to buy out those shares and then become the owner of the business rather than being partners with their partner spouse. So that's one area. The other area is it's a competitive world now. I mean, and to keep good talent and keep people working, they need some other benefits. So we've structured these plans to where the business becomes the borrower on the transaction, but then they buy a policy on some of their key people, and once they fulfill their commitment, so it's almost like they handcuff their talented people. You see this a lot in doctor groups, lawyer groups. I mean, even I've done some with where universities, paid their coach that way. I mean, so there's just so many unique ways to do this. Harbaugh had this plan in Michigan, and I think the coach at Clemson, has a strategy like this. But they see it as a benefit because of the tax savings, and then the university doesn't have to pay out as much in their salaries. But they're borrowing the money from their endowment. So there's a lot of neat ways to do this. But I think business owners, the protection in the early years with the death benefit, and then as the business grows, or they sell the business, or they retire, then we'll transfer the policy to them where they can use that for supplemental retirement income just to take care of themselves, but also but in the early years protecting each other's partnership interest.
Yeah, that's a really good point. And, also I've heard that same, setup and scenario with business owners to attract, top talent and retain top talent. So I think there's so many ways that I love when you can see, hey, here's this tool. You could use it one of multiple ways, but it kind of brings this thought to my mind. Someone could listen to this and go, that's a great idea. Let me just go buy one off the shelf or down, Googling it. But you really need a specialist like yourself to know all the nuances and intricacies. So talk a little bit about the role a specialist plays in making sure that the full picture is articulated, the complexities of this premium finance is actually dialed in the right way to meet the needs that you've got and to hit those objectives.
Well, I think that insurance carriers over the years have evolved into saying that they don't want a person to be able to just go out and buy this because there's too many moving parts. So they started this vendor intermediary program, years ago, and I went through this, a long time ago, but the point is that when you're an intermediary, you have to know, number one, you have to have relationships with the banks, the lending. So you have to understand finance and lending, and how to structure the policy. And then, the insurance policies and being independent is great, but you also have to know a multitude of products with different carriers and how they work and which type of product is going to fit the client. So, it's not just one size fits all, so it's really is uniquely designed depending on what they want to do. But Mike, I spend a lot of time reading, studying. I enjoy that. I enjoy doing that. But also, I have to understand, because the insurance policies have, rules too, for tax laws. I mean, there's just a lot of different types of things that you need to know. And what's been great is over the last, since COVID, I mean, COVID wasn't great, Mike, but it transformed my business. Instead of having to, do a presentation, travel, and hope it works out. I mean, Zoom is been so great. So a lot of times, I'll present this concept as part of the team of the advisor or IMO I'm working with, knowing that I can present it, I can answer the questions for the client. We've funded over $2 billion of insurance since I've been doing this. I have close to $1 billion in loans. I mean, so that wasn't always like that way, but every year, you learn a little bit more. A client situation is a little bit different, and you learn from them. But the main thing is that when I work with an IMO or an advisor as a specialist, I have one job to do is make sure that the policy gets funded correctly, make sure the policy is performing correctly, and I have to pay a bank back. I mean, so that's so the money isn't free. I mean, they need to get paid back. So that's really important to me.
Yeah, that's a great point. And making sure that all of the pieces are put together in the right way, performing the right way, deadlines, checklist, if this, then that is invaluable for someone to know that this is being put together by a specialist. And I think that's really, really powerful. So I think at this point, Daniel, if this is something that someone is hearing a couple of these things that resonate with them and wanted to get a little bit more information and reach out and connect with you, what is the best way that they can do that?
Well, I think that my website is www.perpetualwm.com. So www.perpetualwm.com. I got a ton of resources on my website, and the best way to get a hold of me is to get in contact with our team by email, and that can be at info@perpetualwm.com. It's a great use of time because we do have a lot of information. Mike, the reason I love this strategy so much is the fact that I just educate people, and this is not a transaction that happens like, hey, I'm going to the store, I'm going to buy something, and I have it, right? I mean, this takes time. There's a lot of planning involved. It could be estate planning, it could be insurance planning, could be a lot of different things. So it does take time to work through the strategy, and the clients do have to qualify, like we talked about earlier, financially. But insurance is also underwritten, so the client has to qualify medically as well. So that's the process.
That's perfect. Well, thank you so much. I really appreciate you coming on, Daniel, and giving some of these insights, and appreciate your time.
Thanks, Mike. I appreciate it too. Good speaking with you today.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.